Oil has been dropping since June, but this week's global sell-off kicked oil's decline into a higher gear as Brent in West Texas fell to new lows. The Fed's next steps will be important to the oil market. To explain why, Danske Bank senior analyst Jens Pedersen joins us from his office in Denmark. Jens, thank you so much for joining us. So we're spending all our time focused on slowing economic growth, slowing demand, and surging supply. Why do you think actually the oil market should be following what the Fed is doing?
Well, so far this year, the talk of the oil market has been this positive supply shock with OPEC changing its strategy to preserve market share. And then recently we have had two new shocks to the oil market. First, the Iran nuclear deal and the prospect for additional oil. And then recently, over the past couple of weeks, a demand shock has hit the oil market as well. To reverse this trend of expected weaker demand, well, then the oil market will look to Fed, because it might take a postponement of a Fed hike for the oil market to really gain some comfort.
Jens, what specifically are you listening for coming out of Jackson Hole?
Well, I'm looking for any comments from central bankers in terms of central bankers committing to keeping a hand under the economy, to ensure markets that they won't allow growth to weaken, and a commitment to do what's necessary to achieve that.
Jens, what's it going to take for oil markets globally to rebalance?
Well, I think right now it's about what the reaction of central banks to the recent market turmoil will be. Will we see a softer tone from the ECB at the meeting next week, and how about the Fed in September? Obviously, they will need to postpone the previously expected rate hike, but they might have to do even more, at least in terms of communication and in terms of comforting markets, in this case the oil market, that they are here to support growth going forward.
All right, so Jens, just finally, what's your year-end target for Brent and why?
Well, for Brent, we are targeting a price of $52 per barrel in Q4, and that's because, well, that's a bit higher than where we are now, and that's because we do have faith in Fed, in ECB, and to some extent in People's Bank of China, that they will deliver further comfort to markets, and that will lead to a rebound in oil price along with demand and global growth expectations.
All right, thank you so much, Danske Bank senior analyst Jens Pedersen joining us there from Copenhagen.